Hi there, you're watching Buy Now Sell Now on ET Now with me Shreyanti Singh and Srishti Sharma, and over the next 1 hour we'll get all of your stock related queries answered from both a technical as well as a fundamental perspective. But well, first things first, let's take a look at what the markets are doing, and markets are not in agreement with the color that we're wearing, Srishti.
Well, certainly, Shreyansi, because it's once again that the markets are seen to be under pressure because they are off the day's highest point. If you look at the Nifty 50, that did broke below that 23,400 levels as well on an intraday basis, but for now it's down about 120 points. While it's Nifty Bank that is trying to lend some bit of a support to the overall benchmark indices, because Nifty Bank is up around 100 points, and it's HDFC Bank, the heavyweight, that is moving in tandem with a move in Nifty Bank, still in the green and holding a gain of over 1%. Other than that, if we look at the top gainers, then it's Hero MotoCorp riding it from the front, almost 5% gain coming in after Q2 earnings. That was a mild bit of on the positive side versus the estimate, as well as the management commentary that is lending support. Hindalco, as well as some of the other aluminium counters, specifically from the likes of Nalco and Vedanta, are seeing a surge after the China export rebate announcement. Other than that, on the flip side, it's the IT pack that is the weakest link in today's trading session, because stocks like Wipro, TCS, Infosys, these are the top three draggers in Nifty 50. And even on Friday, we have seen Nasdaq declining almost 2.5%. But the breadth of the market right now is tilted in the favor of the decline. So that is something that we are watching closely. Other than that, it's India Wix that is also up around 6.5%. That is not very great for all the bulls out there, and hence the market movement. So we'll track for that particular index as well. But quickly, let me take you through some of the movers and shakers in the F&O side, and that's the city gas distribution companies that are seeing a cut of around over 13% from the likes of IGL, MGL, Gujarat Gas, because after the cut in the APM gas allocation, these stocks are drifting lower. But all in all, a lot of stock specific action, what I could say, Shreyansi, but definitely on the index level, the key to watch is whether we hold on to the key support levels or we break below those levels on an intraday basis today.
Well, absolutely, and Nifty still clutching on to that shade of red at this point. So that is the kind of picture that we're seeing, at least for the markets. But let's kickstart taking all of your stock-related queries with our guests. And before we do that, viewers, on the top of your screens, you should be able to see the number that you can write to us at. Do remember to mention the buy price for the stocks that you're already invested in. There you go on your screens. You should be able to see that number. Do remember to mention the buy price for the stocks that you've already purchased and the time horizon for the ones that you're looking out to purchase. But with that, let's kickstart taking all of your stock related queries then. We do have Kunal Bothra joining us, as well as Gaurang Shah, who's the Senior Vice President at Geojit Financial Services, joining us. Gentlemen, good morning. Thank you so much for joining us today. Let's kickstart taking all of the stock related queries. But before we do that, Kunal, I'm going to come to you for a quick check on the IT pack. What do you make of the IT index at this point?
Yeah, today's selling is a bit intense, for the IT stocks, and actually, this comes as a negative surprise for the IT pack. But it's over the last, 6 weeks or 7 weeks to 3 months, almost, that what we've seen is that the IT index gets into a single day of a sharp correction, a mild follow through over the next couple of days, but then almost like a V-shape or a U-shape recovery for the IT index which follows. And we've seen that pattern happening for the IT index over the next, over the period of the last 2 to 3 months. So I think if I go by that, then probably my expectation is that maybe this time around the market sell-off or the sell-off for the IT stocks could be bottom too. What we need to see is evidence of a breakdown for the IT index to start getting into a major downtrending mode, and that major support for the IT index overall is closer to that 40,000 mark, 39,800, 850 to be precise, for the IT index. So if we break below those levels, only then I would believe that a major downtrend could be in the offing for the IT index. But as of now, looks like that maybe just a corrective phase and could be digested just about that 40,000 mark for the IT index.
All right, so that's the day coming in on the IT pack. But with this, viewers, let's kickstart taking all your stock-related queries on the show. We do have Kunal as well as Gaurang to guide you better, and a lot of queries already pouring in. And the first query that I have is coming in from Vignesh from Bangalore. And Gaurang, let me take it from you because he wants an advice on Natco Pharma. He's holding over 160 shares and his buy price is 1,453 rupees. He wants to know what's your take on the same, if this stock is in your coverage list, as well as at what price rather he should start averaging this particular stock. Good morning.
Well, Shrishti, thank you so much, and morning to all of you all. What price to average, I think I'll leave it to my good friend Kunal to give an advice. But in terms of the outlook for the stock and our view, we have a fundamental coverage on Natco Pharma, and our targets are somewhere close to about 1600 from a long-term point of view. And this is one space actually that has not really succumbed under the selling pressure that we have witnessed in the month of October gone by, and whatever we are witnessing in the month of November, Shrishti. Uh, Pharma and IT has kind of stood out the weather in terms of selling pressure. Uh, we believe that the company is well placed to take advantage of the areas that it has been operating in. Uh, my sense is that if you have a longish term time horizon, and long term is at least 12, 18, 24 months plus, then it won't be difficult for Natco Pharma to go towards that 1600 mark, which is our target. So I would advise him to hold on. I think these levels or lower levels can be used to average.
All right, so these or some lower levels can be used to average. But Kunal, since this stock is also seeing some bit of a down move, at what price he should start averaging?
So yeah, I think my sense is that 1300 seems to be a good support for Natco Pharma, and very recently, in fact, the stock managed to take a bounce back from 1290 levels, move towards the 1450, 1440 mark, and from there again a mild corrective phase towards 1375, where it's trading right now. But my only sense is that maybe the stock may not go into a retest of the previous lows of 1300. That could only happen if there is an incremental, a very sharp kind of a correction which comes back into the indices, which I don't foresee over the next few days at least. So I think on that anticipation, you can keep 1300 as a benchmark for Natco Pharma. In case if the stock happens to correct and come back to those levels, you can look to average or add further.
All right, Kunal, I'm going to come right back to you. We do have a viewer who's not mentioned their name, and they've written to us about a couple of counters, India Glycols as well as Jyothy Labs are the ones that they're looking at. Now, they're looking for prospective investments for the next 1 to 2 years. What do you make of these two counters firstly? And what are the levels then that you're looking at to add for both of these counters?
See, I think both the charts are a bit different from themselves, of course. But Jyothy Labs, first, that stock in the last 2 months has fallen very sharply from almost 580, 600 levels towards 400, 415 mark, where it's trading right now. Now, the concern for the charts for Jyothy Labs is that the stock has fallen almost 10% to 15% below its 200-day moving average, which is closer to 475, 480 levels for the stock, with the current price around the 410 levels for Jyothy Labs. So there could be a point which may originate for the stock that the stock becomes a lot more oversold on the short-term charts. But this also indicates that the trend for the stock is on the downside. So which means that what you can be looking out for is maybe buying in tranche. You can buy at current levels, say, 1/3 of the expected quantity at current levels, because the stock seems to be coming back into an oversold territory on the process of a bounce and potential retest to the previous lows of 400 approximately. I would believe that you can look to buy the second leg. So I would probably believe that buying on phases for Jyothy Labs could be a better strategy. India Glycol, on the other hand, the stock has been more resilient. It's trading above the longer term averages. The indicators are very strong. The volumes have been a lot more consistent for India Glycol, and the long term charts have also been a lot more stable. So this seems to be a good stock even at current levels, as well as a potential dip, say, closer to 1050 odd mark.
All right, so that's the take coming in on India Glycols as well as Jyothy Labs. But once again, coming to you, Kunal, because this one is an F&O query coming in from a viewer named Sundar from Delhi, and where he has bought one lot of PFC at a price of 467 rupees. I believe that since the spot is around 462, so his buy price must be closer to the current market price. But is that a hold or books the mild loss right now? What's your advice?
So yeah, so the stock, I think the future side is trading at a discount of 3-4 points, 458, 59. Is the futures price for PFC. But again, not a very bad or a negative chart. I think the stock has just been trading closer to its long-term moving averages. So my sense is that it's going through a time-wise consolidation. Now there are two things which you can look out for, two different styles, of course. If you are more on the defensive side, you want to be a lot more risk averse, then the best trade to do right now is, since you have a futures trade which is on the buy side, you can just hedge it with a 460 put option for the current series or for the next series, depends on which series you've bought into, and hold on to your trade over here, because in case if the stock gets back into a bounce back, and even if it crosses back above the 200 moving average, you could probably be at a point where the stock may come back into green for you, and that's where you can take a call whether you want to book profits or not. On the other hand, if you're looking at just as a disciplined trade over here, then keeping 454 as a stop loss on the future side could actually turn out to be a good play, because that's the recent swing low for PFC. So either of the strategies you can look out for, either a stop loss based trade or a hedge trade for PFC.
All right, then, Kunal, I'm going to give you a break for now. I'm going to come to you, Gaurang, because the next query that we have is coming in for you. It's about BHEL. Manoj from Mumbai is writing to us about the 500 shares that he's holding on to with a buy price of 260 rupees. What do you make of this particular counter then?
Well, this has been a painful one, honestly speaking, in terms of earnings. And, the earnings sway both ways. In some quarters, they deliver very strong earnings on fallback of the order book that they have and the execution that they do. But if you look at, if you have to reflect upon the recent quarter gone by, then there was a disappointment in BHEL. So earlier we had a recommendation on the buy side on BHEL, but then after the targets that we had set aside from a long-term point of view on BHEL, they were in place, and we have given a sell recommendation as of now, or book profit recommendation. You can call it either ways. It is going to be challenging for this company to recover from the kind of performance-related, concerns are concerned. Though it happens to be from a very niche segment, that is cap goods engineering, electrical equipment and products, government company. Order book is absolutely fine. There is no problem. But one needs to be a little bit more cautious in terms of what are the capabilities of this company to execute that order book. Because only after you execute that strong order book will it translate into earnings in terms of top line and profitability. So that is somewhere we see it as a missing link. So we have a sell recommendation right now. If I have to give an alternative idea over here to this investor, then I think Bharat Electronics Limited will be an alternative investment idea. We have a recommendation over here on the buy side. It is also a government-owned company, but it is more capable in terms of the defense side order book and the execution capability and capacity. So it will be prudent to make a switch from BHEL to BEL.
And prudent to make a switch from BHEL to BEL. That's the take coming in from Gaurang. But time. Welcome back. Thank you so much for staying tuned into Buy Now, Sell Now. Let's continue taking all of your stock-related queries. Then in the next one I have is for you, Kunal, because we do have an investor who's asking, Venkatesh from Indonesia actually was asking us about 3 stock recommendations that you might have for the next 1 year after this particular fall that we've seen. What do you have for him?
Very, very tough one to answer, especially in this kind of a market, but I'll try my best. And few of the charts which I've been tracking off late, and the ones which I believe are the ones which are looking very strong. Of course, it's a dynamic market, so things could change, over the near to medium term. But few names which I believe looks very strong. First one is HDFC Bank. The stock looks extremely strong, sturdy in terms of the charts, trading now closer to that 1700 levels. Just few days back, it was on the verge of a breakout of its lifetime high points, and my sense is that the stock eventually would get into that breakout of life highs and start a fresh course of an uptrend for itself. So looks very attractive from current levels, and especially if you are building your portfolios at current zone, you need to have solid large cap names. Interglobe Aviation is the other stock which I believe after a decent correction of more than 22%, I think from 5,000 plus levels to now sub 4,000 mark, is also at a very attractive point. The stock is just holding on to that long-term moving average as well as oversold nature of indicator. So that's another stock which you can look out for, especially from a longer-term play if you're looking to accumulate or start to accumulate at current zone. 2 mid-cap stocks. First one is Deepak Fertilizer. So I think the entire fertilizer space looks very strong. So either Deepak Fertilizers or you can look at Chambal Fertilizers. Both of these stocks are very attractive. And the other name which I would be bullish on from a medium-term perspective, 6 months plus kind of a time frame, is Hikal Logistics. That's a chart which I think closer to that 400 levels is also on the verge of a potential breakout on the monthly chart. So expecting stock to come back to the zone of 500 to 550 over the next 12 months or so.
All right, moving on to the next query then. And Gaurang, this next query is coming in from Smita Vikram from Bangalore, and she wants your take on Swiggy. She's been allotted shares in the IPO, so for now she is at a profit indeed. But she wants to know your view on the same, and maybe she's looking out for money, so that's why she's wanting to have a take for the next 3 months. I can't put this question to Kunal since because of the limited chart history, but overall, what's your take, Gaurang, on Swiggy, and what to do with this particular holding, and in the near term, any expectations?
Honestly, Srishti, 3 months is going to be even difficult for me to give an idea because fundamentally, we look and analyze stocks and we do come out with a recommendation in terms of IPOs also. So let me say this to help our investor and friend that we had a subscribe recommendation on Swiggy's IPO from a long-term point of view. The floor was at 171 to 390 and the shares were given out at 390, which is the higher end. Stock currently at about 422, a decent kind of listing gains also it saw. But the problem is that 3 months time horizon is going to be very, very difficult. So, just in case if this investor needs the money and is possibly thinking of trying to, squeeze a little bit of more profit, it's going to be very difficult for me to give an outlook for 3 months. But in case if you can change your time horizon and if you can extend it from a long-term point of view, then I think purely the quick commerce business, which is happening along with the food delivery platform, Shrishti, is going to be a huge transformational change for both Swiggy as well as Zomato. Instamart is with Swiggy and Blinkit is with Zomato. And both these quick commerce platforms have been delivering decent kind of earning visibility for both the companies. So instead of 3 months, if you can extend it for long term, I would advise you to stay invested.
Well, absolutely. So that's a take coming in as far as Swiggy and the entire Q-commerce as well as e-commerce space is concerned. But I'm going to come back to you, Kunal, because we do have Hitesh who's writing to us. Now, you had suggested Godrej Properties at around 3,100. A sell recommendation is what you suggested for this particular counter, and he's gone ahead and done that. But now he's looking for good levels to enter for the long term. What do you have in mind again?
So again, it looks like the trend for the downside is not yet completed for Godrej Properties because the stock is still consistently forming a lower, lower high, lower low pattern on the short to medium term charts. Now, I sense that maybe at 2600 levels, the stock may just about get into a phase of a pause. But if you're looking at building on the long side, then you need decisive evidence in terms of charts that the stock has reversed. And the first, port of call which we look out for is the breakout of the previous week high for the stock. For example, in the previous week, the stock made a high of 2720 approximately. So you can keep a potential 2730 as a breakout point for Godrej Properties. It's okay to let go of a couple of percentage points, till the time you wait for that confirmation rather than anticipation of a breakout. So I would believe that if you're looking to go ahead and build long positions, then 2730 on the spot levels could be a breakout point for Godrej Properties.
All right, then once again coming back to you, Kunal, this query is coming in Kalpataru Projects, where Nikhil, who is a trader from Mumbai, wants to know your take on Kalpataru Projects, and is this a right time to make a fresh investment or initiate a fresh buy here?
Yeah, you can look to go ahead and go for a fresh buy at current levels also. So far, so for example, the only concern which I have on the charts when of the last 6 months or so is the volumes dipping down to sub 1 lakh on daily basis. So I think the average volume sometimes for the stock is just about some 60-70,000 odd for the stock price. That's a bit of a concern because we've seen stocks falling very sharply, and if you don't get an exit into stocks which suddenly get into a breakdown mode, that becomes a concern for short term as well as even medium term investors who enter into the stock. But other than that, the structure for the stock is quite okay. We've seen the stock hanging on to that 1100, 1200 range for the last 2 years in terms of the support point. And the recent breakout for the stock was in 2021-22 when the stock had managed to cross levels of 700 plus marks. So my belief is that if the stock holds on to that 1100 levels and it's now trading closer to that support point of 1100 levels, the risk reward is attractive. You can go for a buy. But as I said, that the illiquid nature of the stock would probably restrict you to add a lot more higher position size on the stock.
Alright, then that's the take coming in. As far as Kalpataru Projects is concerned, the next one that I have is for you, Gaurang, because we do have Gautam from Mumbai writing to us about a couple of counters. Now, Varun Beverages and United Spirits are the ones that he's looking at. For the next 12 to 18 months, what is your recommendation here?
Well, both complement each other in terms of the operations that they do, Varun Beverages and United Spirits. Unfortunately, because of the coverage not being there on either of them, I won't be in a position to give a recommendation in terms of buy, sell, and hold. But look, let me give you Varun Beverages. I think it's one of the pure, FMCG related play with respect to the soft drinks category and the bottling of it. Uh, if I want to compare Varun Beverages with any other listed entity, then according to my knowledge, I don't think there is any listed entity in this particular sector. And it is, of course, being associated with a very strong brand. So the outlook in terms of business is very, very strong. As far as United Spirits is concerned, I think this company went through a lot of changes. Currently, the management that operates this particular company is very, very niche in terms of the kind of products they have, not only in the Indian market but also in the international market. And along with that, you have you know festivities and marriages and everything lined up, which will possibly propel the consumption to the next level. This is also one of the finest companies in terms of spirits, and they have products at entry level, mid size, and high end. So it's a very niche player in the spirit stroke alcohol segment.
All right, that's the take coming in on all these alcohol-related stocks. But with this, welcome back to Buy Now Sell Now, and let's keep it going with all your stock-related queries then. And the next query that I have, Gaurang, I'm coming to you for this one since this is on Canara Bank, wherein Anand from Chennai has bought 2,200 shares and his buy price is 125 rupees. Since this stock too has seen quite a bit of a correction, and Anand's buy price is very close to its 52-week high. So what's your view coming in on Canara Bank, Gaurang? Good to hold on or average at this price point?
Well, both in fact, Srishti, good to hold and average as well. I would give that. And we have a recommendation on the fundamental side on Canara Bank. See, the problem with the entire PSU banking had its own problem, but PSU Bank more so because before this October sell-off and November sell-off that we've seen by the FIs, there was a sell-side report from some institution as far as PSU banks were concerned. So much before the market witnessed the correction, the PSU banks witnessed the correction because of that sell-side report. If I have to reflect upon the Q2 earnings, then according to our sense, Canara Bank, PNB, Bank of Baroda, State Bank of India, Indian Bank, they all delivered good set of numbers. In fact, some of them were better than what the street estimates were. So if you are a long-term investor, first of all, stay invested. I don't know how much of total exposure does Canara Bank has in his portfolio. But if it is not significant, then taking advantage of this price correction, I think the stock is somewhere close to about 97 or 98 rupees today, thanks to the correction that we are witnessing. It's a great time to have it averaged at current levels. And in case if somebody wants to make a fresh investments from a long-term point of view, then I would recommend that as well.
Absolutely, and we've seen quite the sell-off come in for the PSU pack. In fact, the PSU pack's sort of share coming in India's total stock market capitalization has declined to an 11-month low, and that is something that we've also seen come in. But let's continue taking all of your stock-related queries. The next one that we have, Kunal, is coming in on Asian Paints. When you take a look at the query that we have, 27 shares is what OSN Reddy from Hyderabad is holding on to at a loss of 25%. Hasn't mentioned their buy price, but what do you make of this one, average or exit?
See, I think, of course, the stock has been a fabulous compounder over the last many decades, but then the recent charts for Asian Paints has been a lot more, dull, negative for the stock, because I remember, I think 2023-24 also, the stock made a high closer to 3,500 levels, and from there, even on that monthly time scale charts, the stock has been unable to break past about those highs of 3,500, and that too at a point when the markets were going into full throttle on the upside. But then I think that's the disappointing aspect about Asian Paints. Now the recent sell-off has been a lot more sharp for Asian Paints. There has been a major gap which has been created, but generally we've seen that when stocks go into an underperforming zone and then get into a very sharp kind of a sell-off, those are terminal moves or ending moves for stock prices, and especially for larger cap names. So even after the weakness in terms of the charts, my sense is that you can continue to stay invested. I would suggest to go long, onto the stock, or maybe add a few more shares from your existing quantity. But that you should do only once this gap is closed, which is I think at 2700, 2750 mark as the upper end of the gap. So the moment the stock breaks past about this 27, 2750 levels, that's where I would believe that you should look to start averaging out.
All right, that's the advice coming in on Asian Paints. We're moving on to the next query, and this one is coming in from Naga Kumar from Hyderabad. And Gaurang, he's holding two stocks. One of them is Tes Network, bought 100 shares, and his buy price is 1200 rupees. And he also has Rallis India, 500 shares in total, buy price is 275 rupees. Gaurang, he wants a longer term view on both of these names, maybe for the next 2 to 3 years. What to do in both of these names, and since he is at profits, so what's the outlook given the market correction that we are seeing right now?
So, Srishti, honest, I mean, if I recollect vaguely, then Tejas and Rallies used to be under our coverage, but then currently we don't have any coverage. We have not continued with it. In terms of the operations, as far as Tejas Network and Rallies India is concerned, both the companies are quite strong. The most unfortunate part currently is the kind of levels of correction that we are witnessing. And very often, Shrishti, it happens that investors do not have the kind of capability and capacity to fathom the kind of correction, and of course the unwanted noise that we hear on the street. They end up taking a wrong decision. I won't give a specific comment on Tejas and Rallies whether buy, sell, or hold, but these are the companies that when possibly the performance starts trickling in, they turn out to be a compounding kind of an investment. So the outlook for the business opportunity and earning visibility remains extremely strong for both Tejas Network as well as Rallies India.
Well, absolutely. So the next one that I have is coming in for you, Kunal, because we do have Jay Krishnan writing to us from Kerala, wants to know about Hindustan Copper. Now, he purchased it at 322 rupees, hasn't mentioned how many shares he did purchase, but he wants to know if he should exit at this point and shift to the likes of HCL Tech or even for that matter, Indian Hotels then.
See, I think that shift from Hindustan Copper towards HCL Tech or Indian Hotels could probably be more of a balancing out strategy from your entire portfolio perspective. So if, for example, you already have IT stocks and hotel names, or hospitality sector as an overall, then I don't believe that you can probably look to add further into these names. So it's more of a strategy shift over here. But yes, the charts for Indian Hotels, for example, is a lot more stronger as compared to the other two names which you mentioned, HCL Tech as well as Hindustan Copper. So yes, on a relative basis, Indian Hotels looks very attractive. But Hindustan Copper has been a stock which has been very high beta. Yes, over the last 2-3 months, the stock has gone through a very sharp kind of a correction. But then the ability of the stock to bounce back has also been, when we look at the historical charts, has also been very strong. So whenever the market gets back into a bounce back process, there could be a point where Hindustan Copper may get back into a V-shaped recovery, and you might probably expect the stock to cover up, the kind of losses it's, taken over the last 2-3 months. So it's all a kind of a strategy shift. If you're looking at more of defensive side, then yes, shifting towards HCL Tech and Indian Hotels could be a good strategy.
All right, I'm once again coming to you, Kunal, because this one is a short-term query coming in from Subramaniam from Chennai, and he wants your advice on Paradeep Phosphates. That's the first stock, holding 30 shares, buy price is close to 90 rupees. And the other one is NMDC, 25 shares, holding from a price of 126 rupees. What's the short-term view in both of these? Is that a hold or sell?
I would recommend a hold on both of these names. NMDC, my sense is that the stock is holding on quite well towards the 200, 220 as a support range. So, keeping that as maybe a floor point or a support point, you can continue to hold on to the stock. Even for Paradeep Phosphates, the stock, on a short-term history, whatever history, limited history, which I can spot in the charts, I think it looks attractive. The stock has slowly and steadily given breakouts at regular intervals. First, it was a range of 74, 75 approximately, then an 85, 87 mark, and now the stock is close, trading above the 100 plus levels. So I believe that in that aspect, it looks as an attractive stock. You can continue to hold on both of these names.
All right,
Right, and the next one that I have is coming in for you, Gaurang. Vinod from Gurgaon is writing to us about a couple of counters. Grieves Cotton as well as UPL are the ones that he's looking at. 1800 shares of Grieves Cotton at a buy price of 143 rupees, and for UPL 300 shares at a buy price of 499. Should he add more at this point or just hold on for the longer term perspective?
Greaves Cotton, I'll give it a pass because we don't have a coverage on UPL. Unfortunately, this has been one of the laggards in the specialty stroke agrochemicals universe. If you have to reflect upon the numbers also, well, I think the first quarter was very bad. Second quarter was a little bit of face saver, but nothing more than that. Our view in terms of the investment, well, uh, it can possibly recover from the kind of difficult time that it is dealing with as far as the earning visibility is concerned. And if you have that kind of longish time horizon, then I think 640 could be the target on the long term basis for UPL, that is United Phosphorus Limited.
All right, that's 600 is the possible target coming in for UPL. Moving on to the next one, and Gaurang, once again coming to you. By any chance, do you track GMR Power and Airports, wherein Shravani from Hyderabad wants to know, is this a good stock for a long-term investment?
No, Srishti, we don't cover this one. I'm so sorry.
All right, technically, Kunal, would you be able to advise Shravani on this?
Yeah, I think it's a decent chart. I've been tracking the stock from point when the stock was almost at 40, 45 odd levels towards the point when the stock had moved towards 160 mark. Again, more or less, the stock has also participated in the recent correction in the mid cap, small cap space. From 160, the stock is almost at 100 levels if it's GMR. Urban infra, and even for GMR Airports, I think the view is very similar. Both of the charts are very same. I would suggest that you can continue to hold on to both of these names. If you're looking to buy or add further, then I think it's a good level, good starting point for you to start nibbling into the stock.
All right, and that's a whole recommendation coming in on GMR Airports. But time for a very quick breather on the show. When we come back, we'll continue taking all of your stock-related queries, so don't go anywhere. Welcome back. Thank you so much for staying tuned in to Buy Now, Sell Now. Let's continue taking all of your stock-related queries then. And the next one that we have, Kunal, is coming in from Sudhir M, who's writing to us about ONJC. Now, he has 2,500 shares. Buy price is 296 rupees. What is your suggestion when it comes to this particular counter?
See, of course, a top quality name from the PSU pack. Off late in the sense over the last 3 years or so, we've seen ONGC do pretty well for itself from I think the recent high was around 350 short mark for ONGC, and yes, the stock has corrected sharply from those 350 levels to now 250 plus zone. But it looks like the stock is coming back into an oversold territory. Now the concern for ONGC is the drift the stock gets into. So when it gets into a corrective phase, it's not the price correction which impacts the stock, the holders of the stock. But then the time it takes for the stock to complete its phase of correction, that patience is something which is required over here. My assumption is that you're a long-term investor, and I think if that's the case, I think ONGC should be a good part of your long-term portfolio. I would recommend buy at current levels.
All right, moving on, and Gaurang, once again coming to you. This query is from Ghosh Dada from Delhi, and what he's saying is that he's holding 80 scripts in his portfolio and he's doing pretty well. He's one of our regular viewers and keep writing to us. But now he wants to sell some of the shares which are doing well, but rather wants to put his money in stocks like L&T, HDFC Bank, etc. But can you suggest any 5 or 6 stocks which can be bought right now? He's also saying that you are one of his favorite analysts, so wants your guidance on the same.
Well, thank you very much for those kind and humble words, Ghosh Dada. Srishti, I mean, 5 stocks without any rocket science, to be very honest. You named 2 or 3 of them: L&T, HDFC Bank, Reliance Industries. I would possibly look at, and I'll pick up 5 large cap names from 5 different sectors. So you have 3 names: L&T, Reliance, HDFC Bank. TCS would be the third one from an IT pack. And if I have to pick one from maybe a cement major, then by default, with the kind of capacity that Ultratech has, that would be the 5th choice. So you have 5 large cap names from 5 different sectors.
5 large cap names from 5 different sectors. That's the recommendation coming in from Gaurang. I'm going to come right back to you though, Kunal, because we do have Sanatana writing to us from Bengaluru. Wants to know about IndusInd Bank. Now 500 shares is what they're holding on to at a buy price of 1068. When can they book profits?
Well, that's a difficult point because IndusInd Bank has apparently been one of the more weaker charts, a hugely underperforming stock in the private sector banking name. And I remember, I think, at a point when the stock was almost at 1500, 1600 in 2022-23 mid, I think from there the stock has been a consistent disappointment. Now the concern for IndusInd Bank is, that the stock has broken below its key averages, the major moving average, which is the 200 DMA. And we've seen historically that whenever the stock has broken below those levels, there have been points when the stock has been 6 months, 9 months, even 1 year below those long-term moving averages. So the concern is the time which the stock could spend, sub this 200 moving average, that could dent the recovery prospects for IndusInd Bank. You can hold on to the stock as of now because your cost price is very close to the current market price. In case if the stock recovers and say you get back into the green, I think you can continue to hold there as well as try and trail stop losses. But a much more better strategy is to go with the strength in the private sector banking names, and so far it looks like that HDFC Bank and potentially even ICICI Bank are the two stronger names from the banking names so far.
Right there. Now, but once again, I'm coming back to you, Kunal, because this one is a query from the options segment, wherein Suresh from Bangalore has bought 2800 call option of Colgate Palmolive at a price of 35 rupees, and he has bought 6 lots of the same. So what's your view on this one, Kunal? Since for now it's out of the money, what should be the strategy here?
Yeah, my sense is that you're looking at a recovery or a short covering move for Colgate. But my only concern is that that's a very nimble-footed strategy which you're looking out for, because when sectors go into a very sharp correction like what we've seen for the FMCG index, there are times when the recovery is very, very quick, very fast, but then the recovery is very shallow also for many instances. So I think in this case, you may continue to hold on to the stock or the option so far. The current price for the option is around 32. The recent low for the stock is around, the option is around 18 to 18 and a half. So maybe closer to 15, 15 and a half is what you can keep as a stop loss for this trade. But then the sooner it comes back into green, and assuming if it comes back to say levels of 40, 45 odd, that could be a point where you may look to even book profits.
All right, then that's the take coming in as far as Colgate Palmolive is concerned. But viewers, those were all the queries that we could pack for you on the show. Thank you so much, Kunal, as well as Gaurang, for joining us today. I'm going to move on, and when you take a look at quick commerce major Zepto, that tells ET Now its cash burn hit about 250 crores in September to October due to store expansion as well as festive costs, but will stabilize by financial 25 end. The details of the latest fundraise will also be revealed soon by the likes of Ramdev Agarwal. Juneja Brothers are marquee investors as well when it comes to this particular update. Sneeze joining in with more updates then.
Team of Zepto has exclusively told ET Now that the cash burn reports that we're seeing in the media of 250 crores, 200 to 250 odd crore rupees for the last 2 months, which is September and October, is a one-off expense. And this is on the back of the festive season inventory stocking that they have done, and also the marketing costs and the marketing and ad spends that they have rolled out during the campaigns during the festive season. Now, they've also said that the company had 350 dark stores in June. They have guided for 700 by the end of the year, by 750 or rather by the end of the year, and they're very close to opening 700 now. So this is also an exclusive update that we've got from Zepto as well. Now they said that the cash burn had reached 200 to 250 crores back in September and October, but they expect this to stabilize and come back to the previous levels of 30 to 40 crores before the end of FY25. And they say that most of the expansion for the capex front is now done. Marketing costs were also at a peak in September and October, but they are going to ease going ahead as well. Now, while this was on the cash burn front, let's also talk about the update that we got from them on the fundraising front. The company could not confirm if the total fundraising and cash balance post this fundraise, they could not confirm the exact amount. However, reports peg this cash balance amount to be between around $1.4 billion, but the company has said that this is not precise. So we'll be watching out for any announcement on this front. What we did get from them is that Motilal Oswal's Ramdev Agarwal has made a $40 million investment into Zepto's latest fundraise round in a personal capacity. Other than this, a lot of Motilal Oswal led domestic clients have put their money into this fundraise as well. You have the family family offices of Bisleri, Manipal and Cello that are other investors. And what we also got from them is the Mankind Pharma brothers, Ramesh and Rajiv Juneja, have also invested in this recent fundraise. Now, a formal announcement on all of this is expected this week, and if we're to believe what the management has told us, it could be expected this Wednesday itself. But largely, this is what we got from them on the cash burn and the fundraising front.
All right, thank you so much, Snehi, for highlighting all those details. But with this, viewers, it's time to wrap this edition of Buy Now, Sell Now. It's a goodbye from me and Shreyansi and the entire team who put this show together. Thanks so much for tuning in.